After the inspiring inaugural session, we move on to the keynote address. Gold markets in the next 5 years, opportunities and challenges is the first keynote. To deliver the keynote, may I request Mr. John Reade, Chief Market Strategist, World Gold Council, to come off stage, and please. Mr. John Reade is a globally renowned precious metal strategist with over 30 years of experience. His views and opinions on the markets are keenly followed worldwide. His Twitter handle is very famous, as you all know. Can we please put our hands together for him?
Well, thank you very much for this opportunity to present at the 15th conference of the IIGC. It's been an absolute pleasure to be here. The first time I've been in Kerala, and so far what I've seen of it, I'd say it lives up to its reputation. I'm just waiting for them to move the podium away. Otherwise, I don't think you'll have the benefit of seeing all of my very many slides. I'd like to thank as well both the organizers of the conference, but also my colleagues at the World Gold Council in India, particularly Somasundaram, and Mukesh Kumar, who helped me put together this presentation. Now, always when you give one of these presentations, the first thing you've got to work out is, how does this work? I think the big button makes it go forward, which is good. We'll have to see what the little button at the bottom does. I hope it makes it go back. So I've been asked to speak on gold markets in the next 5 years, opportunities and challenges. There are both opportunities and challenges in the market, and I'm going to talk about the international market. And although I don't know as much about the Indian market as the people in this room, I'll give you some ideas how I think things are likely to play out over the next 5 years. I think the first thing to bear in mind is the world will get richer. We're often focused on short-term difficulties in economies and slowdowns and the potentials for declines, but over the very long term, we see the market getting richer. Am I not speaking loudly enough?
I'll adjust the mic for you.
Thank you. I like it when people adjust the mic. So you can see here, the world is going to become richer, and you can see also that India and China are going to become richer too. And that's really important because India and China are the two big markets. If I look at what's going to happen per head, per capita, GDP per capita for India and China will continue to grow. Now, when I first put these slides together, I looked at, wow, look at the difference between India and China. China's GDP per capita is already much higher than India, and that gap continues to get bigger. I see this as an amazing opportunity, though. If you think where India has come from, if you think at the rate of growth that is taking place in this country, you compare it to the slowing growth that's happening in China, one of the trends that will manifest over beyond the next 5 years is India catching up with China. But considering that these are the two biggest gold markets in the world, that's really important. Now, gold demand has increased over time. It's one of the things that we've seen. There are peaks and troughs and various events that make it rise and fall, but the trend has been of increasing. And the biggest driver of that trend is income growth. Work we've done and we've published research on talks about how income growth drives consumer demand. Now, I've heard many of the presentations and the speeches today talking about how Indian gold demand might be set to decline. And that's certainly possible, and I'll talk about some of the factors that are contributing to those fears. But if it does happen, it will be a surprise, because all of the data we've looked at all of the markets shows that as economies grow, as income grows, that drives gold demand. Particularly when you look at income per capita, and if you think as well about the demographic benefits that India will have over the next 25 years, you are at the sweet spot in terms of your demographic dividend. Increased wealth, increased middle class will, in general, drive gold demand. There's also new opportunities for consumers around the world as well. When we at the World Gold Council developed exchange-traded funds in the early 2000s, we didn't expect them to be such a popular source of gold demand. These markets, the exchange-traded funds, opened up gold buying to investors and savers in many different markets, and they've been a tremendous success. But they're not the only thing that's been worked on to similarly broaden access to gold to other investors. We launched a Sharia standard a couple of years ago, so there's now a pool of in excess of $10 trillion of investments that is specifically invested via Sharia-compliant products that now can access the gold market. We launched LME Precious in London in partnership with the London Metal Exchange to help the London OTC gold market have a place where it could trade on exchange, reducing its capital requirements. We've heard talk about the Indian Spot Exchange, a good example of something which is now going to be enacted over the next few years and will have material benefits and changes to the Indian gold market as well. And new markets could open up, and the infrastructure that exists in current markets can trade. ETFs demonstrate how this can be a real game changer. There's new classes of investors, like the Sharia Gold, and new trading venues. I didn't show a slide on it, but if you look at how the Shanghai Gold Exchange changed the market over the past decade, tremendously successful. So with LME Precious, the Indian Spot Gold Exchange, and others, there's certainly room for new markets to come along. Technology could disrupt the market as well. I've just picked here, I guess that's about 25 different products that are being launched that make gold accessible and tradable in a different way. Many of them are around blockchain technology, and this gold fintech space, as we call it, is a rapidly developing landscape. We think of 4 gold fintech concepts: an online vaulted gold product, a crypto gold tradable token, a crypto gold payment and collateral vehicle, and finally crypto gold trading itself. All of these things are being pursued by multiple entrants at the moment, attempting to disrupt the gold market, attempting to take the system as it's seen at the moment and make it different. I don't know whether any of these are going to be successful. It's evolving very quickly, and as far as I'm concerned, there's no killer application. There's no one product that's been launched out there that is set to change any of those 4 aspects. But one thing is very clear: there's a tremendous pool of risk capital available if you say that you've got a blockchain or a fintech-based application. You can raise a lot of money and you can attempt to disrupt the market. This may well become a catalyst for change in the global gold market and in individual country markets too. I'm very hesitant about talking about India-specific drivers to an Indian audience. You know more than me, you know more than I ever will do, but we've attempted to pull a few things together. The first thing I would say is, even though agriculture's contribution to GDP is not what it was, at about 15%, it's still a very important component of the market. And if you look at the rural contributions, and not just agriculture, but rural and everything else, still more than 50%. So the fact that we have a government here that appears to be pushing the development of the rural sector so strongly is likely to be very positive for growth in the country, for reducing inequalities, for building the middle class, and probably towards gold demand as well. 60 to 70% of gold demand is purchased in rural areas. Anything which focuses development towards this sector could have amazing consequences for gold demand. Some details here provided by my Indian colleagues. On the fundamental markets, so in other words, looking beyond some of the individual sectors I've spoken about, a couple of things I wanted to point out. First of all is how a large market can develop quickly when government facilitates and enables this. When I started my career, and through the early 2000s, all of my colleagues who looked at industrial commodities were raving about China and how important it was to their businesses. And they asked me about gold, and I said, to be frank, it doesn't matter. China used to produce 200 tons of gold. It used to consume 200 tons of gold. It never exported. It rarely imported. If you wanted to buy and sell gold, you had to go to the People's Bank of China. But in the early 2000s, the Chinese government started to open up the market. And they took that 200-ton gold market, about 200 tons of production, to being now a 1,000-ton market in consumption, about 450 tons of production. It's the largest importer. It's the largest producer. It's the largest source of gold demand. Don't be put off by the last bar on here. That shows the first half of 2018. Based on quarterly data, China's gold market continues to recover. Should be back around 1,000 tons this year, we estimate. Similarly, Indian gold demand has fallen over the last couple of years, but this half one slide, again, it only represents the first half of the year. It certainly hasn't fallen, as this chart might indicate. For reasons that Som has outlined, we continue to expect Indian demand to recover over the next few years. There's been a number of shocks to the market, needed shocks, you could say, with the introduction of GST and the general reorganization of this market. We expect that to unwind and for India to recover to about 800 tons over the next 5 years. We certainly don't expect the number that was said on the stage earlier of 1,600 tons. And there's a couple of reasons for that. I'll come back to those a bit later. I think the other thing that was said, we heard about the US market here. The US market for jewelry is still relatively large, but it's only a fraction of what it used to be. This used to be a 420, 440 ton a year market, and now we're sitting at about less than 150 tons. So it shows that jewelry markets have changed in other markets too. So people thinking about the export sector and thinking of the US, it's not the size that it used to be. So be careful. Technology is an area that we write about quite a lot at the moment. I think it's really important that people understand that every electronic device that they have, including the people that are reading them at the moment instead of listening to me, every electronic device you have has gold in it. And although clever technologists try to replace gold with other metals, they try to make their devices smaller, they're fighting a losing battle. The world is becoming more connected. We're using more electronic devices. We will continue to do so. So after a few years of decline, we've now seen technology demand increasing, and the first half 2018 numbers show yet still further increases. It's about 10% of demand, and it's about the same size as this segment, which is central banks. When I started off in the industry, European central banks were selling gold because it was old-fashioned and it was out of date. The financial crisis taught them, and lots of other investors, that gold actually has a lot of benefits within a portfolio, so the Europeans have stopped selling. And what we've actually seen is many other buyers come to the market. China, although they stopped a couple of years ago, Russia, even India bought some gold back in 2009, and again recently as well, as we reported about in our gold demand trends. So what are the challenges? Tax and regulations, what a surprise. Tax and regulations affect gold demand, and they affect the shape of the gold trade. So we've seen, for example, the introduction of 5% VAT in the UAE from the 1st of January 2017. That's affected demand in the UAE, and it's affected regional trade flows too. I mentioned GST before. We think it's a positive thing in the long term. We think there's a lot of advantages to it, but there's no doubt that short-term implementation of that caused hiccups across the economy in gold as well. Another example, the 20% VAT that exists on gold bars in Russia, that's an impediment to gold demand in Russia. That's one of the programs the World Gold Council is working with the government there to try and get that changed. So this topic has come up in conversation already today. Millennials' propensity to purchase gold. Now, this is not just an Indian thing. One of the things that we've done at the World Gold Council is look at sentiment across major consuming countries, so India, China, Germany, the United States. And we looked how different age groups think about gold. I've taken the one from India here, although the other information is available on request. And what you can see here, look at the red bars. The red bars show what the younger people are doing. The green bars show what the older people, although it does say older is 34 years old and above. That makes me feel very old now. But in all the cases, you will see the propensity or the inclination to buy gold is lower for the younger generations than it is for the older generations. And that's the case in this chart as well. You can see the younger millennials are more likely to want technology than their older peers. And if you look at, again, their fine jewelry, the left-hand bar lower for the millennials. Now, in terms of what the millennials, what will get the millennials to buy, we actually heard very clearly, enunciated earlier, is it's not that they won't buy gold, it's just they need to be marketed in a different way. One of the things that we're doing now is we're rerunning that consumer survey. We'll do that in the latter part of this year and publish the results in 2019 to see how attitudes have changed over the last 3 years. And this is a data series that I want to continue with, repeating every 3 years, so we can see globally how people think about gold and how that's changing. I think the crucial thing here is let's look at markets where millennials have been successfully marketed to. Let's have a look at see what works in some markets and perhaps share that information in other markets as well to help the industry. It's not an India-specific problem, it's a global problem. I have this down here as a challenge, and it certainly is a challenge for the mining sector. You know, we obviously know that India isn't a significant gold miner, and that internationally gold mining has grown very well over the last 10, 20, if you go back further, it's grown very well since the 70s. Well, what we are seeing now, looking at the mining projects and operations, is they're struggling to grow. And in fact, with the fewer projects being brought into production, and as the mines get old, we're expecting to see declines in gold production from the international mining sector over the next 3, 5, and beyond years. The discoveries that have been made have been few. In order to permit a gold mine, it can take up to 15 years in some jurisdictions to get it permitted. The capital costs are huge, and the environmental, social, and governance issues involving mining getting ever more complicated. Operating costs have risen, and political risk has increased in many prospective regions. I think personally we may be underestimating how quickly gold mining production will decline over the next 5 years. So to summarize these factors, in the next 5 years, people across the globe, and especially people in China and India, will be richer. Their tastes will change. New markets for gold will have opened up, both within India, China, but also other countries as well. And it's possible that these new fintech may have changed the shape of the entire gold market. But generally speaking, fundamental factors for gold demand will likely be supportive for gold. We're seeing solid, large-scale demand from the 2 biggest and 2 fastest growing economies in the world. At the same time that supply from new mines is likely to be constrained, and that central banks will continue to purchase gold. Taxes and regulations will play a key role for global gold markets, but what I would say is that as an organization, we support the regularization of the gold market. We think gold is a mainstream asset that should be treated as one, and that is only going to be possible within a properly regulated and appropriately taxed environment. Please connect with us. We actually run 4 Twitter accounts here. I'm not quite sure what Mukesh was thinking about. There's mine, there's Alistair Hewitt, who runs our supply and demand analysis, and there's the Gold Council one as well, although I personally think that's a bit boring. But also, Som is now tweeting as well, and if you want to get the insights into what we're thinking about the Indian gold market, please do connect with him, as well as me and Alistair. Thank you very much.
May I now request Mr. Senthil Nathan sir to come and give the memento to Mr. John Reade. Thank you, sir. Thank you.